Ladies and gentlemen, good day and welcome to the Q2FY23 earnings conference call of Bharat Electronics Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Umesh Raut from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Stephen. Good afternoon, ladies and gentlemen. On the behalf of PhillipCapital, a warm welcome to all of you. Today we have with us senior management of Bharat Electronics to discuss the 2QFY23 results and business outlook. Management is being represented by Mr. Dinesh Kumar Batra, Chairman and Managing Director in charge, Director Finance, Mr. Damodar Bhattat, General Manager Finance, and Mr. Srinivas, Company Secretary. Without taking much of time, I would like to hand over the call to the management for their opening remarks. Thereafter, we can start the Q&A session. Thank you, and over to you, sir.
Yes. Okay. Good afternoon. Our second half, basically first half, the second quarter, completed on 30th September 2022, and I'm very pleased to share with you that we have clocked 6,960 crore in the H1 of 22-23, which over the previous H1 is a growth of 34.18% in the turnover. Our EBITDA has grown at the rate of 48.97% at 1,369 crore, whereas in H1 21-22 it was 919 crore. EBITDA as a percentage has increased to 19.67% in H1 compared to 17.72% in 21-22. Our profit before tax has increased by 66.43% at 1,403 crore, whereas in the last H1 it was 843. Similarly, PAT at 1,043 has increased by 67.14%. Our earning per share, this is at the enhanced capital of 731 crore, is at rupees 1.43, which was 85 paisa if we adjust to the increased capital. There is also a growth of 68.24%. Our order book remains on 1st of October, 52,795 crore. And if we see quarter on quarter, so in Q2, we have grown at the rate of 27.19% over Q1 of 22-23. EBITDA has increased to 856 crore in Q2, whereas in Q1 it was 513 crore. So there is a growth of 66.86%. PBT has increased at the rate of 42.73% over Q1 at rupees 825 crore, whereas it was in Q1 578 crore. Similarly, PAT is 611 crore in Q2, whereas in Q1 it was 431 crore. There is a growth of 41.76%. Earning per share in the Q2 is 84 paisa over the 1 rupee share, whereas in Q1 it was 59 paisa. So there is a growth of 42.37%. So this shows we are on the path to achieve what guidance we have given, that 15%, which I am sure as our major turnover comes in the Q3 and Q4, so we will be able to achieve the 15% growth what we have shared with you all previously. Still, we have already booked around 2,000 crores worth of orders in H1. We continue to share with you that around 20,000 crores orders will be booked in this complete financial year. So these are the major highlights of H1 of 22-23. Now open to your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life. Please go ahead.
Hi, sir. Good afternoon. Thanks for your time. First, on our order inflows, we got this very large battery pack order from Triton, about 8,100 odd crores. So if you could just help us understand, timelines for delivery, what kind of margins you make, what kind of if any investments or any capacities will need to be put up, and more importantly, beyond this, are there any repeat orders? Are you looking at other customers? How do you see this piece kind of shaping up over the next couple of years?
Yes. First of all, I would like to say this is not an order. This is letter of intent which Triton has signed with us in the DEF Expo. They have acquired this plant, this is AMW, which is located in Bhuj, and they are going to make the electric trucks there. And we have developed battery packs for their electric trucks, which they have given us this much requirement and letter of intent they have placed on us over the 2 years. But first, we have to give them battery completely evaluated by AIRI and other designated agencies. And once this battery is proven, this much orders will be, if the potential orders are there. So at the moment, it's a letter of intent. So talking of the price, etc., is all to be further negotiated. They have already placed one order for one battery, which is around 37 lakhs one battery. Rest of the things, once completely things are proven and the final order will start coming, that time this margins, etc., will be discussed. So at the moment, I can't comment on the margins. But so far the battery packs is concerned, we have already put up a state-of-the-art automatic plant at our Pune factory. Also, I would like to share with you that there was in DEF Expo this fuel cell-based motorcycle was displayed, in which also our battery had gone, and this battery had the first indigenously manufactured lithium-ion cell. So this battery pack was made with the indigenously designed and manufactured cell. So this plant also we have put up in our Pune factory. Depending on the business shaping up, we are open for further Capex in both for making lithium-ion cells as well as battery packs.
Okay, I understand. And so because I read somewhere that you would be starting deliveries early next calendar year, is that right? So effectively this order should get booked this year itself. Is that the right understanding?
Yes. In fact, everything is going in a quite fast mode as this company has acquired a completely built plant, I think, which had gone sick, and they have acquired it. So now the one battery which they have given us, the firm order, this will be a first off model, and this will go through all the tests, etc. So once that is proven, then only the more number of orders, and then how many will be coming in the first year, because they also have to start building up the trucks in that plant. Not only our batteries, but their trucks, and then the truck should find a good market and they start putting up. So it will be a lot of interdependent, but they have shown us that much potential by giving us the letter of intent that in 2 years' time, this 8,000 crores worth of order will be there.
Okay, and just to clarify, I think you said you also have developed the indigenous battery cell as well, right? For which you may look at, depending on future orders, put up a factory. So this has been developed by BEL itself, and therefore, unlike most other players who import the battery cells, we can potentially put up our own plant and therefore make the battery packs as well. Is that right?
Yes. Yeah. I would just like to give further explanation on this. This technology has been developed by our DRDO lab, from where we have acquired this technology, and we have already put up a plant in our Pune factory, but that's a small plant with the 40 crores of investment. For 350 megawatt around capacity. So once these cells become proven on these battery packs, which will be manufacturing for these electric trucks, then the technology will also be proven, our process will also be proven, then we can just scale it up, and then of course this will be based on the indigenously manufactured lithium-ion cell, and the very first battery which went into the electric motorcycle there, which was displayed, it has already gone and it was working. Of course, not on the road this motorcycle has come, so it has to go through all the tests, but it was demonstrated that it was working.
Perfect. Okay. And so just one more question before I get back. On your FY24 order inflows, because we've been in that range of 18,000-20,000 crores, for a year or two now. We've been hearing some delays on QR-SAM, during the tests, done by the different services. So if you could just update us, on some of these large. So one is of course QR-SAM, but on some of these other large missile programs, when do you expect that to come through, in terms of orders and, the kind of value you expect over the next 2 years, maybe 24 and 25?
Yes. We have already shared with you that minimum 20,000 crores of orders will be coming in both the years, and that too for next 3 to 4 years. And now, if you know already that fourth positive indigenization list was very recently was promulgated, and BEL is having around 39 items with 30,000 crores of potential from that list as well. So now QR-SAM, maybe 1 or 2 tests, they might be doing it again and all, but I don't think there will be any impact on the orders coming in the 24 onwards.
Okay.
And when we say 20,000 crores, these are the minimum. In fact, we are following up with much large numbers. And now with this e-mobility and our civil segment also looking up in our metro segments. In fact, just 2 days back, we have also signed an MOU with the Chennai Metro now for putting this platform screening doors. So after Delhi Metro, now this was another feather for BEL. So the combined things, across many sectors, will not have any impact of 1 or 2 projects slightly getting delayed.
I understand. Great. Okay, sir. Thanks so much, and all the best. Very well.
Yeah, thank you very much.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to two per participant. For any follow-up, may be requested to rejoin the queue. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. So just one clarification what Ankur asked, and specifically on this, the truck order. So the fuel cell, the lithium, the whole battery, the lithium-ion battery, once, let's say, the order comes to you, the MO is already signed and the production schedules will be given to you, will you be importing the cell and just doing the BMS work at your plant, which normally every company is doing here? Or we'll be manufacturing our cell itself here? Because just that clarification I want.
Correct. As I already informed, we are making cell also here. And the very first cell we launched during DEF Expo, and also the battery pack was there in the motorcycle. So now fuel cell and this lithium-ion battery pack, these are two different things.
Yeah.
Of course, we have also signed an MOU to make fuel cell also. Now, coming to it, of course, we intend to put up our own plant of gigawatt hour capacity. But in the interregnum period, if there's a supply gap and the large volumes picks up, we may import in the interregnum period, but ultimately we are going to make our own cells, as we have already put up a small plant where we are stabilizing our process. And in fact, recently many journalists, etc., they had visited our factory in Pune and they saw the cell getting manufactured at our plant.
So, sir, what was the reason?
Now this plant not only is indigenous, this technology also is indigenous, which is being developed by NSTL. This is a DRDO lab in Visakhapatnam. So it's everything, complete supply chain is indigenous. Of course, the material may come from outside.
Yeah. So the question here is that if we were so confident of, getting this our technology inbuilt and indigenized, barring the specialty material which gets imported, why we have not bid for the PLI in the battery?
Actually, we are yet. This is indigenously developed technology which we are stabilizing first time, and this was for basically underwater applications. So we are upgrading this technology for this electric vehicle applications where the temperature range from -10 to +50, etc. It has to withstand. So other technology we have not resorted to the route of importing the technology itself. So at the moment we have not participated in the PLI.
So just lastly from my side, if you can update us on 2-3 programs which were as we spoke on the last call, you were saying that the orders like land-based electronic warfare system, Akash order, as well as the ship-based program, which is a very big number you shared, the NGMV, and where we stand, do you see some delay happening there, or that should fall in next 2 quarters? That's my last question. Thank you.
Definitely, the very clear visibility of 20,000 crores flowing in, as now Akash Prime is very close to happening. Him Shakti is very close to happening, and EW suit for Su-30 and EW suit for MLH, and Arudhra radar, the final negotiations underway. In fact, it would have happened, but there is a change of guard in the ministry, so it's slightly slipped. But definitely, these all programs are going to happen in the rest of 2 quarters.
Thank you.
Yeah.
The next question is from the line of Bharati Sawant from Mira Asset. Please go ahead. Bharati Sawant, your line is in talk mode. Kindly go ahead with your question, please.
Hello. Am I audible?
Hello.
Yes.
Yes.
Yeah. So just a few clarifications. The 20,000 crore order inflow that we are giving for the current year and even for the forthcoming years, the 18 to 20,000 crore kind of visibility that we have, is it purely from defense or does it include some bit of civil side?
Yeah, this will include something from the civil side also. As told in the defense side, there is a EW suits for MLH and Su-30. There is a WLR, there is ADS, ADC and RS, and AMC is coming from for Akash and IACCS. And Akash Prime is there. Himshakti, any day it may happen. Then medium power radar Arudra is there. BMP-2 upgrade. So all these orders, and from the civil side, orders will be flowing in for the metro segment. Like Chennai Metro, just 2-3 days back, we have signed for platform screening doors. And this civil side, ATMS, the present trial is going on.
What is ATMS?
Pardon? ATMS is Air Traffic Management System. It's in the civil side. The rail or metro is there. Then batteries, of course, mobility, e-mobility segment is already looking very bright. And recently we received the letter of intent, around 8,000 crores. So this will, some portion of it will start flowing in once these batteries on the trucks are, proven.
So, sir,
then of course, 60 million USD worth of export also we are going to do, and further orders are in pipeline on the export front. So this will be I would say some 15% around will also be flowing in from civilian segment.
So within the 20,000 crore, 15,000 we are estimating to come from civil, and balance.
15,000? No. What I said.
Oh, 15%. 15%.
At some homeland security, etc. That's why I'm saying 20,000 is a very sure estimate. It may become more than this.
Okay. But this 20,000 crore, we gave guidance before receiving any MOU or LOI from Triton. Do we expect this, do we expect to surpass this 20,000 crore number?
See, number one, of course, yes, more than 20,000 crores order may flow in. But however this Triton is concerned, the very first task is to prove this battery on the truck. So the first time any Indian company is going to introduce an electric truck, which is a very heavy battery, is going to have. So this year, much orders will flow. I'm not sure, but definitely from next year, because once this battery is put, 1 month or two will take for getting all the certifications from the different government bodies which are being set in after there's a lot of incidents of fire took place, and ARI is to approve it. So remaining 6 months, not much may come. Of course, a few numbers may come. So this will go for the next 2 years, where this complete 8,000 crores of potential will become reality.
Understood. Sir, initially, as in in the last quarter, we mentioned that we are expecting about 15% growth. This was despite of some slippages happening in FY22 because of the semiconductor chip shortage. So if you can just brief us, give us an update as to can we expect an improvement in the revenue guidance, or do we still stand by 15% number?
No, I will keep 15% guidance, and so I'm very now 100% sure, seeing our H1 performance, where we have grown at the rate of 34.18%, and all factors, the profitability or EBITDA margin or PF, PAT, etc., they all have grown, and handsomely they have grown. 66.43% PBT and 67.14%, and even our capital is enhanced to threefold, and still our EPS could grow the rate of 68% over the previous one. So I will like to retain the guidance of 15% and EBITDA margin of around 22 to 23%.
Understood. So one more question. Given over a 5-year period, we were expecting the civil segment to become more like 25%. That's the intent.
Yes.
With
Yes.
that, how do you see the margin profile changing?
See, continuously I have maintained this. When you enter in different new segments, you have to have your innovative pricing strategies, because price is never, cost plus. It is how competition is behaving. So there are many variable factors how the competition will emerge in these segments. However, as BEL is a sort of conglomerate of 24 companies, all focused on different product segments, overall EBITDA I see hovering around 23-24%.
Understood. And just one last question on the Capex front.
Yes.
So if you can guide us to what will be the overall Capex for the company over next 2 years? And
Yeah,
related
in
towards
fact,
the
at the moment we have 3,000 crores Capex, approved Capex, from which we have already done
216 till September.
No, not this year. Out of 3,000,
2,000.
1,500 already done, and this year it is picking up now. The labor market and commodity prices also becoming stabilized. So our plants at Nemaluru and Ibrahimpatnam, etc., they are shaping well. Nemaluru is almost nearing completion, where we will be putting up now plant and machinery and testing equipments. Ibrahimpatnam has started coming up. Nagpur also we have started. So this year I'm quite hopeful that around 1,000 crores we will be able to do. But this is an ongoing process. The 3,000 crores is getting executed and new projects are getting added up. As you know, very recently we have also signed an MOU with NHPC for putting up solar ingots, wafers, and then cell and module level. So as this will start taking shape, the Capex will increase. We are also exploring to go for semiconductor fab to put up. So those all proposals are underway. So this what I can say, that around 1,000 crores we'll be doing this year. Next year also I see around 1,500 crores. And also in R&D will remain also in the tune of around 1,000-1,100 crores.
So this 1,000
Ma'am,
to FY23.
Sorry to interrupt, but for any follow-up questions, may we request you to rejoin the queue, please. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Dipesh Agarwal from UTI AMC. Please go ahead.
Yeah, good afternoon, sir. Sir, my first question is, we are guiding for 20,000 crore kind of inflows. Hello, am I audible?
Sir, your voice is a bit muffled. If you can take the phone.
Yeah, 1 minute. Up now. Sir, my first question is, so you are guiding for 20,000 crores of inflows next year, but I believe even if you get a one regiment of QRSAM next year, that could be itself 12 to 13,000 crores. So what is that keeping you conservative on guidance? Even I believe you would be factoring in this e-mobility inflows next year.
Yes, in fact, it's not, the requirements are there. But as we have seen from the past, the budgets become constrained, and then government has to put more budget towards the revenue expenditures rather than capital. So keeping those things, I don't want to give the highly optimistic estimates. As 20,000 crores, I see definitely happening. So at the moment we are keeping it around there. But simultaneously, I keep on telling that it will be much more than this. But at the moment, I'm keeping this level, and this kind of order inclusion gives me the turnover growth, which I say is 15 to 20% in the next years. This year I say 15%. So I have sufficient order book at the moment. The order lag is some 52,000 crores.
Okay. And so secondly, so the Triton order, is it contingent on any conditions of them winning any order from a third party, or is it for the end market?
That's what you are very right to say. There are a lot of things to happen. First, this is such a very big battery pack. The truck has to come out of their plant, and then battery has to go on the truck. Then all the roadability tests and other the safeguards which the standards government has come out with, it has to meet everything. So first trials etc. will take some time. Only those are the conditions. If everything is in place, the orders will be flowing in. And mind it, they also have to sell their truck. They will not be building up the inventory of batteries as we are capable of making, but they have also to sell trucks. And the charging infrastructure is coming on the roads. Of course, many chargers have started coming on highway, but all those will be the limiting factors and enabling factors, you can say.
And this is for Indian market.
See, I can't comment on the Triton. It's a US company which they have put up in India by acquiring this AMW, Asia Motor Works. What they will be doing, at the moment, I'm not much privy to it. It's a nascent stage. And seeing our capabilities, they have given us this letter of intent so that we can put our money, and if we need to expand the plants, etc., so we should not shy. So that's why they have shared this MOU with us.
And sir, lastly, can you comment on the cash flows? Because if I see the cash flow in first half, your cash flow from operation was negative. So how is the working capital situation right now?
Working capital, as we have good cash we are having with us, and at the moment when the year got closed, we had 4,200 odd crores of cash with us, and as the to meet the large turnover in the next 2 quarters, the inventory etc. we are purchasing, so money has gone there. And it will.
So there is no delay in the payments from the government side.
No, there is no delay. Only thing wherever the milestones etc. are not being achieved, and in fact, government is having a lot of money on the capital side, but because of these milestones not coming up, which will be taking shape by the end of third quarter. But we are also approaching the government as they have a lot of budgets in capital, so relax some of the milestones so that, and they have shown very positive on that. I'm sure in next 2 to 3 months, a lot of percentage debts will be realized.
So
and last year, as you know, we had a very... Pardon?
Fair to assume this year's closing working capital days would be in line with the last year?
Yeah, it should be around that only. It was 1.5 times around last year, current assets to current liabilities. So we expect it to be in the same range.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Ranjit Sivaram from Mahindra Mutual Fund. Please go ahead.
Yeah, hi sir. Sir, just on that Triton thing again, just wanted to understand what will be the total investment we have to do from our end to build that capability for lithium-ion batteries and related manufacturing setup.
See, so far making battery packs are concerned, we have already invested around 12 crores of rupees putting up automatic battery pack manufacturing plant. And so far making the lithium-ion cells are concerned, that lot of investment we will have to make once these cells become successful and we decide to ramp it up. Otherwise, it's always open to, like others are doing, we can keep importing cells and have our own supply chain. In fact, Triton is open to supply the cells by procuring their outside and supply to us. So there, of course, substantial capex will be required, and it will be in the different tranches over the next 3-4 years.
Okay. And sir, last meeting you had also mentioned regarding capex for some Hyderabad smart city which we were planning to do. So what is the current status? Have you put any investment in that?
Number one, we never spoke about Hyderabad smart city. Probably you are referring to the UP 100 smart city.
Yeah, UP 100. Sorry. My
UP 100
mistake.
smart city. Those talks are going on. Nothing much has happened. Their capex is required as they want to do in the BOO model. But not much headway has taken place. Meanwhile, we are winning other smart cities. Sundargarh phase 2 we have got, and the Port Blair we have won.
Okay. So in terms of capex, this year will be how much? And next year?
It will be around 1,000 crores, 750 to 1,000 crores.
This year and next year?
It will be in the same tune. Actually, 3,000 crores of capex is already approved by our board, ongoing projects. So this year, if it comes around 1,000, next year, as 1,200, we have 1,100 we have already completed out of the 3,000. But then new proposals keep coming. So I'm quite, the same tune, around 1,000, 1,200 crores will also be next year. Till this big ticket comes, the putting in the lithium ion or the fuel cell or the semiconductor or the solar, the capex will remain around this. When the big ticket capex materialize, then it will be different story altogether.
Okay, sir. Thanks and all the best.
Thank you very much.
Thank you. The next question is from the line of Atul Tiwari from Citi. Please go ahead.
Yes, sir. Sir, again, just one question on the second half order inflows. So about 18,000 crore is needed. So
Yes.
Which will be like 2-3 big orders which could kind of make up for it? Because
Yeah, Akash Prime is there, which is around 4,000 crores. Him Shakti is there, which is around 3,000 crores. Then medium power radar Arodhra is there again, 2,500 crores. Then BMP upgrade is there, 1,950 crores. EW suit is there. EW MLH is there. WLR, ADC NRS, which is 1,700 crores. AMC of Akash and IC is 650 crores. So many big tickets are quite nearing the completion.
Okay, sir. Okay. And sir, just, though this is slightly futuristic, but you yourself, I think, kind of alluded to it. So obviously, government's intent is very clear, regarding promoting indigenous manufacturing of various defense equipments, and Bharat Electronics is playing a crucial role in that. So that all of us understand. But, obviously fiscal deficits are high this year, and we are headed, into kind of an election season over next 18 or 24 months. So do you see a situation where, the focus could kind of shift to revenue expenditure, and we could see a period where the spending is slightly slower for next, say, 3-4 quarter, which could impact your revenue growth or could lead to some build-up in receivables of the company, even though obviously over medium term we know that things are going to be fine even from that perspective, but over next 3-4 quarters?
No, I don't think such possibility. Our payments are flowing in, and depending on the milestones, etc., we are completing. We'll be able to have the same kind of performance the last year we had.
Okay, sir. Great. Thank you. Thanks a lot.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good afternoon, sir. First question is that you had mentioned after the Q1 call that there was 26 billion lower revenue booking in Q4 due to chip shortage issues. How much has been recouped so far in Q2 and first half, and how is it going for H2?
Piecemeal answers I will not like to give, but you can see our H1 performance. We are almost the first time when whatever we planned and 100% we have achieved, an impressive growth over the H1 of previous year. So I don't think the semiconductor shortage, etc., as our people have tackled it by different measures, we are going to book our the 15% growth, which in absolute terms from some 17,500 to 18,000 crores worth of turnover we are going to achieve. Semiconductor shortage there or not, it's not going to affect us.
Well noted. My second question is, could you help break up the order backlog as of September into defense, non-defense and services? And also what proportion of the defense order book is competitively bid and what proportion of contracts are on nomination basis?
The nomination remains around 80 to 85% of the order book. And major orders, again, which are in pipeline, these are on nomination basis, whether it's Akash or Himshakti or Arudra. So, good amount of orders are going to come from the nomination basis. And if you 52,000 odd the order backlog, the non-defense is defense is 46,000 crore and non-defense is 4,500 crores around. So it remains 10% of almost of defense business.
Okay. And the remaining would be services?
Services is a part of defense or non-defense. So that remains again 10% of our overall business, whether it's a defense or non-defense. This services are included in this.
Okay.
Hello. Yeah.
Thank you.
Thank you.
Okay.
The next question is from the line of KVN Kakadia from Sundaram Asset Management. Please go ahead.
Yeah, hi sir. Hi, thanks for the opportunity. So first, I just wanted to check on the Capex.
Your voice is very low.
Mr. Kakadia?
Hello, is this better?
Yes, sir. Please proceed.
Is it better now?
Yeah.
Yes, sir. So just wanted to check. You mentioned, you've got 3,000 crores of Capex which has been approved by the board for ongoing projects. But for some of the, big ticket that you mentioned, like, for solar module, semi-fab, for fuel cells, like what will be the additional, kind of Capex that would be, required, the quantum for each of these?
Okay. Number one, probably I have, could not hear you correctly. But on my side, I would like to say it's a 3,000 crores total approved Capex, out of which 1,400 crores are already taken place, and 1,000 crores we are expecting happening this year. And now this big ticket, these are still being discussed, evaluated at different levels. So when we'll see when it comes, and we are quite capable of raising funds from our internal accruals as well as being zero debt company, have quite big leveraging power.
But is it possible to just give some quantum on, what would be the approx size for some of these that you mentioned?
Will you say it again? I'm sorry.
No, I'm saying, is it possible to just give the quantum of, Capex that could come for some of these,
I can tell you the projects, but exactly what amount See, LRSAM we are doing, there is some around 350 crores is happening there, but quite a chunk has already happened. Then this advanced night vision factory, which is in Andhra Pradesh, Nimaluru, that is nearing completion. Then the Nagpur, we are setting up an ammunition complex that is underway. Then in Telangana, Ibrahimpatnam, where we are land-based systems factory, we are putting up. Quite a good chunk is going there. And then capital infrastructure investment we have done for EVM and CVPAT, which major deliveries will be starting next year. Of course, some amount of 400-500 crores supplies will be going out this year also. So these are the major projects on which it is going. Of course, there's a D29, that order is already there. So we have put up an investment. FSPU, that is the fiber optic gyro based system we are making. There also is a good chunk is going. So these are the major areas out of 3,000 crores where ongoing Capex is taking place. Then super component test facility we are setting up at Hyderabad. It's an investment of some 104 crores. That's also underway.
Thanks for the elaborating and clarifying. And specifically, so for these for the solar modules or the semiconductor fab, that is it possible to share right now?
It's difficult because still approval has not come from ministry. If it comes, then there is a to the extent of 2,500 crores to 3,000 crores we need to invest. But I don't know how this will be taking shape. And so far, the ministry has not accorded its approval to us.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to one per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Good afternoon and thanks for the opportunity, sir. Just at the onset, would like to congratulate you for your term at Bharat Electronics, today being your last and superannuation day. Many congratulations for all the good work that you have done.
Thank you.
Two small questions from my side. One, at the Defense Expo, one thing was very clear, apart from large programs, there was a lot of thrust on consumable items, arms and fuses. So if you can just share some update in terms of where are we with respect to our projects, where we were doing investments, and what kind of revenue can we expect from the investments that we're doing for fuses and arms, ammunition. And second, for more of a bookkeeping question here, for the first half, can we have the revenue split between defense and non-defense revenues, and also for exports and services revenue split? Yeah.
Okay. So first, arms and ammunition, as regarding our investment going on. So as I told, we are building up a ammunition complex at the 200 acres facility, the land which we have acquired. So this is going on, some around more than 150 crores, which will already land. We have paid around 110 crores. And already we have a fuse manufacturing facilities at our Pune factory. Now we have already won 100 odd crores of orders this year for fuses through the revenue route, and the participation, which was for 50 lakh fuses to be supplied over 10 years, and I'm happy to share that we have crossed. This has taken 4 to 5 years. Now we have completed all the trials and we have been declared successful in the trials. And very shortly, this prize bid is to be opened. And I can't say there's another company also, ECIL, who is in fray. Finally, we too remained in fray. There are other private companies. They have fallen on the during the various trials, field trials, DGP trials, etc. But I'm quite hopeful that we are in good position to win this order. And if it comes, it will be very big, the tune of 4,000 odd crores. And not only this, we are already manufacturing long-range glided bomb and many other make-to programs we are participating. Very recently, we had signed an MOU for this Hammer, which is Rafale France, where this is range extension kit for the bombs. And also, we have signed an MOU and pursuing this case of 30 and 40 mm ammunition. So there are many programs going on the arms and ammunition, and we acquiring our own ammunition complex. Till now, we were outsourcing those magazine, etc. So I'm quite hopeful this segment will be a good revenue earner for us for the long time to come.
But any targets we have, like for FY25 or in the next 5 years, what kind of revenue this segment or category can generate for us?
Yeah, see, LRGB itself is some 240 crores, and next year it will be delivered. Or so far fuses is concerned, this must be giving 150 crores every year. And other programs, when they become reality, then it will be much more than this. Now,
regarding the sales breakup, what you are asking. Hello?
Yeah.
Regarding sales breakup, the defense was around 5,700 crores. Non-defense is around 400. Services is around 700, around 800.
And export
is around 60 crores, 67 crores.
Thank you. The next question is from the line of Kirti Jain from Canara HSBC. Please go ahead.
Sir, with regard to order book, sir, when we say we will achieve 20,000 crores order book, despite that our order book will be flat on a YOY basis at 58,000 crores. When do you expect the order book to grow from 57,000 levels to 65,000-70,000 levels, sir?
No, but point is, if our order book remains the 3 times of the turnover we are doing, the excess orders to keep in order book, and then those are not delivered in the way does not affect much. And as so far what you have asked, as I'm saying, at the flow in of 20,000 crores, it's remaining flat and growing slightly. Like this year, I expect to close it around 60,000 crores on 31st March. But when it is more than 20,000 crores, which is my pessimistic estimate, then this will grow further. If the QR SAM takes place, it will grow further. But this much confidence I'm giving that we are having enough to grow at the rate of 15%.
Thank you. The next question is from the line of Dhruvesh from JM Mutual Fund. Please go ahead.
Hi, sir. Sir, of last 4-5 years and after considering the seasonality, I observed that our operating cash flow was negative for first half. If you can help us understand what led to a weak operating cash flow before taxation? Thank you.
No, the current year, as we were just telling you some time before, the operating cash flow, because we have put more on the inventories which are required for the second half production. So that is how it is.
And even, just I would like to add on, to overcome this semiconductor shortage, so we have gone for, to ensure that we should not fall short of, we have built up the inventory for those.
Understood. So it's primarily conservative inventory build-up and no delay of advances or any sort from the government during first half.
No. In fact, if you see our cash and cash equivalents at the end of the period of all 3 cash flows from investing and financing and operating activities, this has gone up. We are 1,078 crores, whereas ended previous H1, it was 772 crores.
Thank you. The next question is from the line of Harshit Patel from Equirus. Please go ahead.
Hi, sir. Thank you very much for the opportunity. Sir, my first question is on the MRSAM program of Indian Air Force. So could you explain what would be our scope of work? In the sense that what could be the total size of orders across years? What will be our work share in that? Which will be the other players in the defense ecosystem who will also be participating? So if you can throw light on this whole MRSAM project, it will be very helpful.
I won't be able to throw at the moment.
Okay, sure, sir. No problem. Sir, coming to my second question on the LRSAM program. So, you have earlier shared that there will be a phase 2 of this program. So, what could be the potential order value for the next phase? Which are the naval platforms on which it will be integrated? And given that we have already achieved very high localization levels while executing phase 1, what could be the localization levels when we will execute it the next time for the new phase?
We request all the participants to please stay connected while we reconnect the management. Ladies and gentlemen, the line for the management is reconnected. Thank you, and over to you, sir.
Yeah, on the same question, and I'm asking my colleague director to answer it.
Yeah. Good afternoon. This is Bhanu Srivastava, Director OU of BEL. This LRSAM projects, we have already given proposal for new generation corvettes, which is around 8,000 crore. That is in pipeline, and MOD is actively considering that. Navy is working on that. Apart from that, there may be a requirement on NGMV, but it's not sure whether they will go for indigenous solution or imported one. So as of now, what proposal we have given to is around 8,000 crores.
Sure. And sir, what will be the localization levels when we will execute for this 8,000 crore proposal?
It will be around 50% of indigenous country.
Okay, sure, sir. Thank you very much, sir, for answering the question.
So, sir, we have to restrict only to 2 more participants, sir. Please.
Sure. Thank you. The next question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good afternoon. Sir, a couple of questions on the Triton EV order that we're going to get. So, that company is going to do some Capex of close to 11,000 crores in India. So, how well it is funded, given it does not have much of a background what we could find on that. So, if you've done some due diligence on that part. Secondly, the quantity, if you mentioned 37 lakhs per battery packs, is it factoring in some 22,000 kind of vehicles, or is there a different or a higher number that we factored in terms of vehicles that will supply? And thirdly, if margins for this order are in line with the company level margins, or they are lower, based on whatever assessment we have of our manufacturing right now.
See, number one, your first part of the question, better Triton can answer it. I cannot answer on their behalf that how many trucks and all they will be manufacturing. They have given us a order visibility of 8,000 crores over the next 2 years once the first of model gets proven in all the aspects.
Are they funded to sustain this order of 8,000 crores?
No, they are not funding. Only thing, like first battery order when they gave us, they have given complete 100% advance. And when we'll negotiate this further battery orders, there will be certain amount of advance they have to give. Besides that, it's our own investments going to be. Regarding your question on margin, I previously also told it will be negotiated, and of course, we will try to build up at least not the company margins of the defense business and all, but we don't do any business less than 10%.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Okay, this will be the last question as the already there.
Yeah, thanks for the opportunity. Just two questions from my side. Can you give an update on the anti-train collision system, ATAX, which you are working, and what's the update there, and what is the opportunity size there?
Yeah, opportunity is unlimited. This we have. This is called TCAS, that is Train Collision Avoidance System. This at the moment we are with the Delhi Metro on this. Once it gets inducted, the sky is going to be the limit. All these metros and then mainline railways, it can be adapted for the main railways as well. Now, just to give you like how other metros are coming. When first we were having with Delhi Metro, 2-3 days back we signed with Chennai Metro for supplying PSDs, that is platform screening doors. So it will find a very good market. Beyond it, it will be very premature on my part to say it.
So what stage are we in to get inducted? So if the trials are over or few more trials are required, or are we in the approval stage and approval is taking time?
At the moment, I will not be able to say more than this.
Fair enough, sir. And lastly, sir, you had mentioned a few quarters back you're looking to raise your service revenue to 25% of the overall revenue. Right now, we are at 10%. So, what would be the drivers here, and any projects which you are envisaging?
For the big systems, they are coming for AMCs. Like this year, we are going to receive AMC for Akash and ISCCS. So, and more our product support centers which are emerging over the different parts of country. So that is giving us the hope of raising it to 25% over the 2-3 years.
And what would the value for Akash and ICAC?
AMC, it will be around from 500-600 crores.
Each?
No, the total orders of AMC on these two parts, which will flow in this year, Akash and IC, maybe around 650 crores odd.
Okay, but that would not help you to reach 25% revenue share. So
no, we are at 15%, going to touch 18,000 or 17,500 crore to 18,000, and again, it will be 10-12% only.
Okay. Yeah, thank you, sir.
Thank you, Mr. Umesh.
Thank you. So, any closing comments from your end?
Closing comment, I would like to say that whatever guidance we have given, we are on the track and seeing our H1 performance, all whatever we have planned, we are able to achieve. So, and all the guidance what we have given, I'm holding at the end of H1.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.